Yeah, it's about 4 or 5. Again, good evening, everybody. Thanks for coming on a busy Tuesday afternoon to our webinar. You might know about DhanLAP. For people who are first-time visitors to DhanLAP or to our webinar, we are a digital platform enabling retail investors to leverage their financial assets and also to invest in products like fixed deposits, gold, and stuff like that. We are a digital financial services platform working across the spectrum of retail financial product investments. We had 3 seminars till now about loan against mutual funds, loan against shares, and volatility and stuff like that. Now, in our presentation for this month, usually it'll be the second Saturday or the third Saturday of the month. Today, this time we tried for a Tuesday to make it a difference and see whether people are comfortable with it and stuff like that. Welcome again. The topic is, like you might know when you register, is about fixed deposits, basically. I mean, I don't have to talk much about fixed deposits. Fixed deposits has been in India as long as Indian financial system is there in various forms, like people saving in your pot at home to the banking system in the early stages to the now the neo banking systems and stuff like that. Fixed deposit has always been a part of savings, where you give it to a lender or something for him to lend it to somebody else and give you a small part of the profit. That's how it started. Now it's in its own corporate form in which banks and NBFCs take fixed deposits, lend it on the other side, and they make a margin and give you a percentage, which is a constant percentage and stuff like that, which is the most effective feature of a fixed deposit, where you're promised a certain percentage of interest and you're paid that every month or every quarter or every year, depending upon what tenure you choose. So let's go ahead. I mean, I'm not going to teach what is fixed deposit. Everybody knows. I don't want to go through that and stuff. I will just show how it affects our overall picture right now and see how it can help our customers to engage in stable products. So, like everybody knows, the market is volatile. I don't have to say the market is volatile. When you see your portfolio or you see the indexes and all stuff like that, you will know that the market is going up and down, mostly down nowadays. It's been up in the last couple of years or 3-4 years, basically, after COVID. And then it's been downstream right now. It's going up and down every day and stuff like that. Obviously, all of us know, all of our advisors for our clients, and all of us know it's unpredictable. And it always goes up and down. I mean, there's nothing to talk about it. It is a volatile market. By definition is volatile. And you get returns over a long period of time, especially equity investments. You generate a higher returns as you stay for a longer period of time, 5 years, 10 years, 15 years, 20 years. And you hear stories of people buying Wipro, people buying Infosys, or people buying Reliance or HDFC Bank and stuff like that in the early 80s or late 80s and early 90s and stuff like that, where they made a lot of money over a period of 20 years, 30 years. They became crorepati's or millionaires or multi-millionaires, depending upon who you talk to and how much they invest and stuff like that. That is the equity market for you, but they would have gone in the last 20, 30 years. They've gone up and down. 2008 crash, 2020, the COVID, 2013, all markets went down. All the 2000 IT crash, a lot of ups and downs they would have gone, basically. That's why advisors like us and advisors in general have a certain portion of your portfolio in a stable alternative. That's what we are trying to talk today. We know about markets. All of us know about how is equities and what they are. We educate our customers all the time and stuff like that. But what we are talking about is a stable alternative. In times like this, becomes more important. When you fall down, only you will think about a doctor. You're not thinking about a doctor or a vitamin when you're very hale and healthy. When you're not well, you think about the doctor. You think about a vitamin. You think about how to get your health back in shape and stuff like that. At that time, there's a useful product where fixed deposit has been for a year, like I said, more than a couple of centuries. Fixed deposit is there in one form or the other, giving stable returns over a period of time, and it's assured returns and stuff like that. I mean, it's the same story. Why fixed deposits? Forget about volatility, volatile market or non-volatile market. Even the market is going up and down, or even one stage going either all the way up and stuff like that. Even then, the risk-averse investors or any of the investors need stable portfolio. Some portion of the portfolio always giving them some returns, some constant returns over a period of time. Therefore, how do you maximize that constant return is a whole issue that advisors are dealing with. Every advisor knows 20%, 30%, 50%, 70%, depending upon whether a retired person or a young personal or a rich person having to diversify to other asset categories and stuff like that. The advisor will know how much portion of the portfolio, but there definitely will be X percentage of the portfolio which will have it in a risk-averse instrument like a fixed deposit. There are other alternatives to it also, but fixed deposit is an easier alternative, easily understood, easily executed, easily made aware of. Basically, they're no aware. Your father, your grandfather, your grandma, everybody did fixed deposit in one way or the other, like I told you before. But it's very easy to explain. You don't have to convince an investor to do fixed deposit. You have to tell him which is better, how it is better, how it is easy, how it is convenient, and stuff like that. That is what a fixed deposit gives you, a leverage. You don't have to explain what it is to most of the 99% of the people. You don't have to explain what is a fixed deposit. So, I mean, like I said, in any diverse portfolio, there has to be a balanced strategy. We call a portfolio diverse when it has a balanced strategy. Basically, it's a oxymoron, diversified and balanced investment. Therefore, there are some assets which is for primarily growth. Your stocks, your mutual fund, equity mutual funds, your other assets are all growth assets, basically, which grow over a period of time, longer period of time. It will be volatile, going up and down and stuff like that. And there is and there are assets which want to be secured. I mean, I want this money no matter what. I want the principal protected. Like you get money from your provident fund when you retire, or you get a bunch of money from your uncle, which you want to keep it safe and stuff like that. But there is a reason for us. There is a place in every portfolio, no matter how rich you are or how poor you are. Basically, there is a need for a secure assets, and fixed deposit beautifully fills that space. I mean, some of the ideas we thought of where emergency funds usually are kept in either liquid funds or fixed deposits. Obviously, like I said, retirement planning is mostly done with fixed deposit. People are comfortable and stuff like that. I mean, you want to explain what is fixed deposit to a person, like I said. And then especially financial goal person is very important, because as you move into the goal, closer to the goal, either short-term, 3-year, 5-year, 10-year, 15-year, even 2 years plans are there, 20-year plan, 2 to 20 years, any short-term to long-term financial goals will need some portion coming into the FD as you near the longer term and stuff like that. There are other products which can suffice it, but FD is an easier selling proposition. Like I said, fixed deposit is easier selling proposition to people who are reaching the goal, or a year, 2 years away in long term, or 5 months, 6 months away in a short term goal and stuff like that. I mean, I don't want to get into the details of how much for a short term or what percentage of long term, closer to the long term you get. That depends upon the client, that depends upon the advisor who's advising and stuff like that. Therefore, but definitely there's a need in all these three cases for a fixed deposit portfolio, or a portfolio of fixed deposit, or 1 or 2 fixed deposit, if you want to call it, in their portfolio, in their overall asset management or asset portfolio. So we have given a table in which most of it we have gone through, or you would have seen it everywhere. We have compared fixed deposit to stocks and mutual funds. I put in one bracket equity mutual funds. We are talking mostly, that's why I put stocks/mutual funds, equity mutual funds, real estate, and gold. I mean, gold is a different type. I mean, some people consider as a financial product or not. Real estate is also, we classify as financial product or not. It depends upon one point of view. But overall, a retail customer, in our platform, or advisors and our platform entertain mostly retail investors, retail advisors who understands and who advises retail customers. These are the 4 major products usually they'll be dealing with in one form or the other. I mean, there's protection thing like insurance and stuff like that, but other than that, these are the products that they deal with, and you've given you the risk level. Obviously, fixed deposit completely protected, nothing can happen to your principal, and your interest rate is predetermined and stuff like that. For the returns, liquidity is also very high. I mean, every MD has to give you the money if you want a premature withdrawal. In 2 to 3 days, they have to give you back the money. That's an RBI regulation around liquidity of fixed deposits. Obviously, I mean, tax is almost the same for all debt products. Fixed deposit comes as a debt product, basically. And then, like I said, if you want predictable growth, like I want 7% per year, I want 8% per year. I don't care about a higher growth, lower growth. I want 8% wherever the country goes, the economy goes, doesn't matter. I want a predictable growth. That's how I planned my life and stuff like that. That's where FD plays a major part. And none of the other products can do that. It can, when you said 8%, you can get 18%, you can get minus 3%. Your real estate can sell for $1 million, or it can sell it for nothing because the government took over your area or something like that. Therefore, the best stability and predictable growth is fixed deposit. That's where, in a spectrum, if you draw a graph, the stability and predictability path will be totally shaded with fixed deposit. No other product can come close to it in terms of those two categories of stability and predictable growth. Therefore, you have to, when the customer needs these type of fixed and guaranteed and stability and predictable growth, then this is the fixed deposit, the only product that will satisfy your need, or your customer's need rather. So we've talked about what is fixed deposit. I mean, I don't tell you what is fixed deposit, but why fixed deposit, how it acts in a portfolio and stuff like that. Now we wanted to, DhanLAP has always been a digital platform for retail investors, like I told in the beginning, to introduce to people who doesn't know about us. I mean, a lot of people ask me, what is LAP? Is it loan against property or something else and stuff? It's actually leverage, accumulate, and protect. I mean, we believe that these three are the cornerstones of your asset building process. You got to, sometimes you have assets, right? I mean, your father gave you something, you acquired something, your uncle gave you something, or whatever. You get assets either by yourself or by inheritance, or by some other means. However, you get assets. You got to do, you have to increase the assets. Obviously, that's a goal usually of most of the people, to increase the asset base over a period of their life or the life term and stuff like that. So for our mantra is leverage it so that you don't sell off the assets, you don't liquidate it, or you don't lose the assets. You can leverage it in terms of your requirement. Leverage is basically loan against mutual funds, loan against shares, loan against insurance and stuff like that. That's what we offer digitally. Accumulate more, and accumulate, a lot of products come into accumulation phase. The accumulation includes your fixed deposits, your gold, your other financial. We're talking about only financial product, not like real estate. We're talking about financial product which can be digitally done and stuff like that. We want to accumulate assets on top of it. Obviously, protection comes. When I say protect is basically protecting your assets, is basically protecting yourself using insurance and other means, how to protect yourself so that you will not lose it. The whole point is about, you have wealth, you increase on your wealth, you don't destroy, you try your best not to destroy it. You cannot say I will never destroy it, but you try your best not to destroy it, basically. That's where our mantra is, basically leverage, accumulate, and protect. Leverage, we have come a long way for the last 3.5 years. We have built platforms, we have customers, we have 5 or 6 lenders on our platform. We have all things, bells and whistles done for the leverage part of it. On the accumulate part of it is what the first product we are launching is fixed deposits. Like I said, digitally done fixed deposits. That's what this webinar is about, and that's what we were talking about, why the company is off, why the platform is offering it, and how we are offering it is what we are going to look at it. We think fixed deposit and other product that we launched for the accumulate portion is a very important aspect of a portfolio. Let's leave it at that portfolio. How big, how small, and all, I don't want to get into it. Of any portfolio, the leverage is important so that you'll not lose it. Accumulate is important so you can build on top of it. Protect is important. Obviously, you have to protect your assets and stuff like that. So we have tied up with about 3 NBFCs, which are giving us fixed deposits through our platform. We are working with 2 other banks. I can't put all the banks unless I have an agreement with them. With Access, I have an agreement. I have 2 other banks I'm working with, which will come into proposition soon. If I'll have 3 NBFCs and 3 banks in our platform, digitally giving you fixed deposits. So fixed deposit, like I said, has been there for about a couple of centuries, right? I mean, various forms and stuff like that. But recently, probably a decade of 10 years or less than 10 years, this has been offered digitally from couple of players in the NBFC field. Now, all the banks and all the financial institutions, if you want to call it NBFCs and banks primarily, offer fixed deposit digitally one way or the other. Now we have combined all of them and we become an aggregation of all these fixed deposits which are relevant to the retail investor. There are fixed deposits which are minimum is 3 lakhs, 5 lakhs and stuff like that, which are probably not for the retail investor that we are targeting about. We're talking about 10,000, 20,000 minimum fixed deposits and stuff like that. You can invest 20 lakhs, you can invest 50 lakhs, doesn't matter. But the minimums that we lower so that people can use it, the retail investors can use it efficiently for their fixed deposit portion of their portfolio, for their, like I said, stable income part of their portfolio and stuff like that. So what it gives you, the aggregation gives you obviously guaranteed returns, which is the primary goal why we do fixed deposit, like stability and predictable growth. Guaranteed returns is what we do it. The other one is flexible tenure. See, this is very important. If you go with only one bank or one NBFC and stuff like that, the flexibility of 3 months, 6 months, 12 months, 18 months, and all that stuff is not there. You want only for 18 months because you know on the 19th month you're going to get want to have that money for some other usage or some other need, basically. Or you want only for 7 months and you want for some other usage. But with this type of about 3 NBFCs and 3 banks on our platform, we would be able to proceed any most flexible tenure to your needs. See, a fixed deposit is nothing but the amount that you deposit, the percentage that you get, and tenure that you have. Only 3 variables in any fixed deposit. Doesn't matter who offers it and how they offer it. How much money you want to invest, that's just your point. How much the tenure, that's your requirement, and the flexibility of the institution, which we try to consolidate and aggregate across institutions. And obviously the interest rate according to it. I mean, if you have 9 months, you'll have this much interest rate. If you have 5 years, you'll have better interest rate or something like that. After 3 or 5 years, the interest rate flattens out because people cannot predict. There are yield curves and stuff like that, which I don't want to get to. People cannot predict after 3 years, 5 years, how much interest rate. Therefore, they just taper it off at that. Therefore, they have this renewal thing after 3 years, renewal after 4 years, 5 years, and stuff like that. Before coming back to our current thing that we are talking about, flexible tenure is very important because aggregation is a supporter for flexible tenure, because a company might give only 7 months, 12 months, 18 months, and 24 months. But you want a 6 month or a 9 month thing, you might not be able to get it. In our platform, you should be able to find that. And then all FDs nowadays, I mean, mostly NBFC FDs and even bank FDs give a special discount for senior citizens. I think it's about 60 years above or 62 years above senior citizen. Therefore, those benefits are given through our platform also. All the benefits that you get from a lender, when I say a lender, a financial institution, either a bank or an NBFC, will be done through our platform also. And we add some value-added services. Just giving what they give is just you can go there. Why should you come through us? Sort of question will happen. You might not ask, but I'm just answering that question. But what is happening is we give benefits on top of it. Like flexible tenure is one thing that I showed in the next couple of slides, or last couple of slides. I'll show you what other benefits we'll provide on top of fixed deposit, which will make your life and your customers' life much more easier and more. It's about flexibility. It's about convenience. It's about making your life easier. Basically, that's convenience, I guess. That's how it is. And then why would you choose us? I mean, like I said, there are multiple. You can go directly to the lender, to the financial institutions, or to other platforms and stuff like that. Like I said, aggregation gives you flexible tenure. Like that, aggregation gives you the best interest rate for your tenure. It's the same thing. With tenure comes interest. Like I said, amount, tenure, and interest rate of only three variables available out there, and you play with all the three to get the maximum benefit. We try to maximize your returns, basically percentage returns, according to your tenure and your money. Therefore, if you have 3 lakh rupees and you want it for 14 months, we'll make sure that you get the maximum return for the 14 months across the products that we offer and stuff like that. And that comes along with, because we're offering from various banks and NBFCs, we are able to offer that flexibility in terms of tenure and the maximization of your return based on the tenure selection and stuff like that. I mean, because they're digital, they're easy to book and track. That goes without saying. It's easier to book one FD here, one FD there, and 2 other FDs in some other bank, and then track everything over here easily, basically, if you go through us and stuff. The last point is a value add that I was talking about. There are FD alerts and porting of FD from one section to one NBFC or one bank to another NBFC or a bank and stuff like that. We'll talk about more in the coming slides, basically. But I want to show you a gist of why would you want to do it with us. Like I said, multiple FDs have to maximize a flexible tenure, maximizing your returns for your tenure, for your amount. And obviously the alerts and porting, which is a unique value add from us, basically. Like I said, it's a zero market risk. There's no market at all in this. There's nothing market. This is a financial institution getting money from you. Basically, you're loaning money to a financial institution for a certain interest. That's what an FD is, basically, in a very pure term. Therefore, the market doesn't play any part in this. Obviously, it's guaranteed and stuff like that by the financial institution. And we go only with AAA plus financial insurance, or banks which are basically protected by RBI and stuff like that. Even NBFCs are protected by RBI and stuff like that. We get to give attractive. We can talk once you register with us. We can talk about commissions, how till you get it, what is the percentage, because it depends upon the product you sell and stuff like that. But this attractive commissions are available for partners. This is for information so that you can be comfortable. Oh, when I sell this, I'll get paid for it and stuff like that. This is a very numbery slide, if you want to call it. Usually, I don't like putting these type of slides because most of them will not read it, and whoever read it will not carry it over. I can give, once you register with us, we'll definitely give you this chart to you so that you can choose for what amount, for what tenure. Like I said, amount, tenure, and percentage are only two things. Tenure is in the left, amount is at the top with various NBFCs and banks, and then the percentage is in the middle. Therefore, I'll give you the sheet anyway. It's anywhere between 8 to 9% is what we give. Senior citizens will be higher, basically. Will be a 0.10. Women investors will be a little higher and stuff like that. We'll give you the whole chart as we go through the whole thing, but you can assume it's 8 to 9% is what you're getting. 9.07, I think, is the highest interest rate you get from Shriram, and if you're a Roman investor and stuff like that. So we'll go through this. A 0.1, 0.2 is not going to make much of a difference, but the companies, the AAA rating, and what companies you choose and what tenure you choose, and maximizing your percentage for the tenure is the one that you will be advising your customers about and stuff like that. For target, I mean, like I told you, I mean, it can be any. I mean, if you look at the target, it's everybody in India who's an investor, basically. But we said, what are the reasons for these guys, for these customers or these persons to invest in it? Like retired individuals, obviously, they want stable. They're not going to earn any more income in their life. Therefore, they want a stable return on the income that they have earned or they have got or they have saved and stuff like that. That's a very simple thing for FD. Most of the FDs in Indian banks are probably from retired individuals, obviously. And one of the things, young professionals, that's one of the things that you want to look at it, because they are diversifying. I mean, also the market is volatile. People are scared and stuff like that. Even without that, they are very smart and saying 20% of my investments or 30% of my investments will go towards FDs, and they maximize the return. Oh, I can get 9% or one thing. I work very hard in equities and figure out what to do and all that stuff, or give it to a mutual fund manager or something. Still, I'm getting 12 to 15%. I'm fine with that for some percent of my investment, but 30% I want to keep it in a stable thing. That's a diversification that we talked about. Any portfolio needs a stable growth and predictable growth instruments, and FD is one of them. And then obviously HNIs, I mean, they want to allocate funds with various pockets or various wealth categories or wealth products, you want to call, however you want to call it. There is an allocation happening to FDs in it, basically a stable return, same thing. And obviously surplus cash anywhere across. I've just put business owners, anybody having surplus cash want to securely keep them on the 3-month FD, 6-month FDs are very famous because you get instant cash, you get instant return, you get some return, but that's okay. But your cash is certainly parked in a very safe manner and stuff like that with a financial institution of repute. That's very important for parking cash for purposes and stuff like that. But these I've given almost all the categories, but the only thing that I put this slide up is what are the reasons that they are doing it for, and you can probably refine it and pitch it to your clients or your customers who are in need of these type of solutions. I mean, we've told several times. One of the things that I didn't tell about ratings, basically, I mean, there are ratings given for each mutual in NBFCs and banks. Are privy to ratings, which you know, but you get ratings from ICRA or CRISIL. Both are rating agencies of high repute, rating that is given. Therefore, these are ratings that are given for a particular NBFC's deposits. You can look at it and say, hey, is it AAA rated? Is it AA plus? We only AAA and AA plus. We deal with it. So we want. This is where we come into. This is where we come into our dashboard, basically. This is our partner account. Now I come to DhanLAP platform. I don't know how many have seen our platform, but if you need, we can give you a demo at a date and time of your convenience. We have a team which works with the advisors to give you demo on the various products that we have. And just showing you a gist of how our partner corner, we call it partner corner, and how in that partner corner there are various tools and various videos and stuff like that. we also have an FD dashboard in which we show you various interest rates, the calculator, how much investment and stuff like that. This is how the dashboard screen will look as when if you're already registered, if you log in, you can click on FD dashboard on your left side and I'll show a small video depicting that. This is what a partner can also assist FD. He can select a particular fixed deposit, which I'll show you in the demonstration. He can, the partner means anybody who registers with us as an advisor, MFD, RIA, agents, brokers, however you are, your partners of ours. We call DhanLAP partners for people who don't know our lingo of partners. And then we enable them not only to have it efficient and cost-effective way of executing it, but we also assist them in helping the clients. The customer is busy, right? He doesn't get up in the morning and say, I want to do a fixed deposit. When you go pitch with them or sit with them, or you realize you have a need, you can select a particular fixed deposit because you are more aware of his financial situation, sometimes better than the customer, basically. Therefore, you will select a particular fixed deposit for a critical tenure, for everything, and you can send a message right from our system, so that the message will go to the customer, and customer has to do is KYC. Customer can only do, you cannot do it. Therefore, the customer can do the KYC and do the payment, and this FD will be reflected on the platform. You will also get notifications. The advisor will also get notification. The partner will also get notification of the everything. But the unique referral link for each of the partner. Therefore, we know which partner sent to which customer and which customer came in and stuff like that. We take care of all that stuff in our product. I'll show you a little demo of our product. This is, like I said, the first screen. On the left side, you see various things and dashboard, eligibility report, and all. When you hit secure growth, this is the screen that will come up. It has all the things that we offer, what percentage. It has a frequently asked questions about how it is done, what is done, and stuff like that. We'll do a slower demo for you. If you can enter the customer saying, he wants to invest 1 lakh for 5 years and stuff like that. You know what you chose, just Shriram Finance, just because the first thing that came up and stuff. You can now, this is the part that I want. You can share it with a client. You did it for a particular client and you share it and put his WhatsApp number. The client will get, it'll have all these things, the various things that you have a platform. The messages that is shared is given over there. Your financial advisor has shared you the thing with this interest rate, with returns, with the digital process and stuff like that. Once this is sent, this will be sent to the customer. Once this is sent to the customer, the customer will come, once that WhatsApp reaches us. You can click on the WhatsApp message and then open up the DhanLAP app. Immediately they'll go to the fixed deposit section for the what you have chosen for whatever month's tenure. You can change it if you want, but you have set it up something for him or her. Therefore, he'll enter his date of birth. These are all KYC information that he has to give the amount and stuff like that. And then, the options are displayed with the option that you selected highlighted, because we had to show the customer all the options, but what you have selected and stuff like that. Then he can use the same FD that you have selected and go through the whole thing and confirm the booking, some PAN, Aadhaar. I'm just walking it through faster because this is just a screen demo that I'm giving it on a PowerPoint sort of thing. Therefore, once the PAN Aadhaar verification is done, if we do the payment can be done using, usually it's done through net banking as what the preferred approach is and stuff like that, or you can use a debit card to do it. Once he's done, the booking confirmation will come. The payment success will go to the customer, and also the payment success email will go to the advisor saying that, hey, your customer Anand has booked this FD, this much amount, this much tenure, this is the thing, this is the interest rate and stuff like that. Everything, the summary will be shown for the customer on the screen. Customer will get an email and the advisor will also get an email. This is a very brief discussion, but we can go and show you a full demo of the whole thing. If you're interested, then we can arrange for a date and a time and register with us to go through the whole thing for you, and then we can take it up from there. Once this is done, I want to show you other parts of it. Everybody will ask this question basically. Oh, I've done the FD. My client has done it. My client has done with most of the stuff that he wants to do, and he's having a nice life. Now comes after he is into a tenure of 1 year or 2 years or 5 years and stuff like that. Then he can have options. Either he can, after the end of 5 years, he can either withdraw or he can reinvest. Okay, just a click of a button, he can reinvest. It is there. Auto renewal facility is also there. When you're setting up the FD in your screen, there'll be an auto renewal button. You can say auto renewal, therefore it will automatically happen. Or at the end of 5 years, you can say, I want to renew. The basically reinvest is called renewal in some screen, in some quarters. Basically, I want to reinvest, I want to renew. It will renew at the interest rate for that tenure and that time. What the interest, it might be higher, it can be lower, and we cannot predict it after 5 years what the interest rate will be, but it'll be for that interest rate for that particular tenure, whatever the amount is will be renewed. And we'll also be constantly monitoring and show you how we monitor, give alerts and stuff like that. Obviously, at maturity, I don't want to reinvest, I want to mature. Your principal interest will directly credit to your bank. If it is a yearly interest, every year interest will be credited. If it is a cumulative, there's a cumulative option and stuff like that. In that case, at the end of 3 years, the interest will be credited along with the principal to your bank account. We verify your bank account. Like I said, you have to give your bank account, your KYC and stuff like that. At that time, we will do a penny drop and verify your bank, and the money will go directly to that bank account which you have specified when you set it up. You can change the bank account in the middle and stuff like that. We can get into with that problem. If you have 5 years and you change your bank account, we'll be able to change it and stuff like that. So the other important feature, other than at the end, either you want to reinvest or maturity, the other important feature is premature withdrawals. Hey, I need money. I invested for 5 years. At the end of 2 years, I want money for some emergency, some need I want it and stuff like that. You can withdraw it, and it can be done. It can be done electronically, digitally. It can be done. We'll work with you to make sure, because each of these NBFCs and banks have different procedures. That's why I didn't put it. The first two are very easy. Reinvest and maturity are same for across financial institutions. Premature withdrawals are different for different institutions because they deal it differently. There's no common procedure. We have all the procedures written in our platform and stuff. We will guide you on how to do the premature withdrawal, and 1 to 2 days. I think they say 2 to 7 days, but I think 1 to 2 days you will get your premature withdrawal money into your bank account with principal and interest. There may be some penalty and stuff like that, which is in the sheet that I'll send it to you once you register. What penalties are there? What is the effect of penalties to your premature withdrawal? Usually, it will be the previous tenure, that tenure. If it's 5 years, it's 2 years. If you withdraw, it's 2 years interest rate that they will do, and they'll have other things as penalty and stuff like usually, but that's not the case with all financial institutions. Therefore, that's what about reinvest and mature. At maturity, what do you do? Either reinvest or get a payout. Or at premature, if you want to do before it, how many days before, how many years before, how many months before, depends on it. You will have to work with us to get it done. This is what we do on our platform. Invest, onboard yourself, take care of you, withdraw, help you withdraw, reinvest, or do premature withdrawals digitally and stuff like that. The final thing is our most important value add for an FD. Okay, well, I mean, FDs are there. I mean, financial institutions have been there for about 30 years or more, 40 years, and banks have been there for 70, 80 years and stuff like that in India, offering FDs and stuff like that. FDs has been there, like I said, a couple of centuries in various forms and stuff. What are you trying to do? Digitally giving it is great. You're clicking some buttons and then giving us a convenience and stuff like that. But what other more intelligent things are going? This slide is the one that talks about it. We do continuous monitoring. See, book and FD, it's not like book and FD, you go away and start. We automatically track, oh, this person has put 3 lakhs in Shriram and 7 lakhs in Mahindra and 4 lakhs in Bajaj and 5 lakhs in a XYZ bank and stuff like that. If we'll have all the data, because once you book the FD through us, we'll get the information like you are getting, and the advisor is getting, and the customer is getting. We are also getting the information that XYZ has booked an FD for X amount, for Y tenure, for Z interest rate and stuff like that. We continuously monitor what is happening, and we evaluate for that tenure, that with the premature, we know what the premature withdrawal rates are basically. Does it make financial sense to port it to a different system? We'll continuously evaluate. I mean, first 6 months, 9 months, it will not be much of a difference. After a year, it becomes important because interest rate also changes, right? If interest rate goes down or goes up, I mean, goes down, you cannot change it. It's bad to change it because you're locked in interest rate, which is good. If it goes up, then for you, it's much more important to get more interest rate than the one that you're getting. If you're at 7% and the interest rate is running at 9% for FDs, it's better to go from 7%, 9%, even if you look for 0.5% in premature withdrawal and stuff like that. So the system smartly compares and evaluates all your FDs to see which is better for you. And we will tell you, I mean, you don't have to do it. We will tell you with instant alerts. We will tell you, hey, another FD option is coming for your same tenure, same amount for this much interest rate. You are paying this much interest rate. And this is what we are trying to do. If you like it, you go ahead and do it and stuff like that. And then when you want to do move, we will help you. I mean, we'll set up an e-mandate in your bank and stuff like that. It's a process that's due, but it's a seamless transfer. Seamless transfer, once you give authority to us to transfer the amount and stuff like that, we have all your data. Therefore, this is where our efficiency comes into the picture, in which we have your data, we have the money, we know we don't have the money, we know where the money is invested and stuff like that. We try to get it and port it to a different thing for a better rate. Better rate is not, there's no use for you. I mean, it's all, everybody is giving 9%, 8.75, 8.8 and all. It's not, because your premature withdrawal will eat away that 0.5% or 25 basis points and stuff like that. But if there's a larger difference, which is going to happen, I mean, it happened in 2023 and some part of 2024 where the rates were going up and up and up, and FDs were left at 6%, 7% when the things were at 9% and stuff like that. Therefore, it might happen again or it might go down. Therefore, you're protected. Therefore, you don't do anything, but it might go up also. It definitely, you know, in 5 years, 3 years, 5 years, nobody knows where the interest rate is going to go. You can predict it, but it's just a prediction. So this is where our digital enablement and our knowledge of the product and how to enable it digitally so that it's useful for the customers in the financial sense also. Convenience on digital systems is usually thought about, oh, I can click a button, I can get it done, I'll get a certificate, and I'm done and stuff like that. But we go beyond it to show you, we will take care of your assets for the FD over a period of time, as long as you have the FD with us. When you take away the money or get a payout, I will not have anything. You'll just send alerts saying that, hey, these are the interest rates available. But this can be very intelligently done. That's what we have done in the system to evaluate. If it makes sense, we'll offer you, this is what it is. Can you, if you want to do it, go ahead and do it. Otherwise, it's fine with us and stuff like that. That's pretty much my presentation. It's been like, what, about 40 minutes. I've spoken for 4:45 or something. The time is, we've spoken for 40 minutes. Any questions you have about the FD, about our platform, about how we do it, anything, I'm open to it. I'll just open the floor for any of the thing. You guys can open the mic and then please let us know, and we can take questions as it comes by. Any questions, sir? I see some familiar faces. I see some non-familiar faces also. Therefore, any questions, sir? You can type it on the thing in the chat. Somebody has typed something. I forgot what is.
Hello.
Yeah, please go ahead, sir.
Yeah, actually, I just wanted to know, other than Axis, which other banks are empaneled with you?
Right now, I can't tell you those banks, sir, but these are premium banks. The one bank which is out of Kerala and one bank which is out of Gurgaon. I mean, you can guess it actually. I cannot tell you because you have signed up with them, but we are signing up with, we have signed up with 2 other banks and trying to do business with them. I can't tell you the names, but these are premium banks, publicly traded banks and stuff like that. Can we do RD? Somebody has asked. Not right now, sir. We can't do RD right now. We are doing only FD possible right now. Once it happens, we will look into RD, but the next step is to looking into RD and savings account. RD, we will get there soon. Today, no, sir. And then what is the other question? Voice not arrived. I don't know what that means. It means cannot hear me or something. Mr. Sanjay Chandusama. Sorry, sir. And what will be our commission? I'll send you the sheet, sir. It'll be competitive commission rates as we as we go on. I'll send you the whole sheet. It's not a single commission like a mutual fund or a broking account or something like that. Various people will have various commission, and we will get that. Yes, any other corporate FD. Definitely, corporate FD is coming, sir. Other corporate FDs are coming through, but we need, like I said, AAA plus, AA plus or AAA basically. Those we are looking at. Not many are there actually. If you look at the market, not many of them are there in terms of that category of CRISIL and ICRA rating. Both have to rate because one company is difficult to believe nowadays. So both have to rate it very positively. We are trying, sir. We will get there soon. Right now, we don't have. Bank FD is the one that we are working very vigorously, and we'll get about, like I said, one bank is already there and 2 other banks we are working and stuff like that. What would be commission? I'll definitely send you the sheet once you register with us. We'll give you the kind of for each for 5-year tenure, it's a commission. For 7 year, for 3 years, it's different. For 1 year, it's different. And for NBFC to bank, it's different. Therefore, it's very difficult to say X, Y, Z like any other thing. On an average, you will definitely get about 0.8 to 1% on a 3 to 5 year FD in an NBFC, and we will share most of it with you. And I'll share the sharing ratio also with you as I put there'll be a commission sheet with the commission rates and the sharing rates. Anything else anybody wants to ask? Any other questions? I mean, I'll open the floor to any other questions about a platform, loan against mutual funds, or loan against shares, or anything else that you want to discuss on fintech, because I have about 5 more minutes of time. I said about 55 minutes. I'll usually have the webinar. Anything else you guys want to discuss? Anybody new, anybody who's already there or knows about our platform? There is one message, Sundaram Finance. Yes, sir, but they don't give us digitally, sir. Digitally, they don't give us, Sundaram Finance doesn't give us message, give us FDs usually digitally. That's a problem that they have from the beginning. I've tried Sundaram Finance. I'm from Chennai, and Sundaram Finance from Chennai, the oldest financial institution in Chennai, probably in after 1950s, I guess. But they're not able to give this thing. Kindly increase the tenure for LAM of year to reap. Sir, you can renew it, sir. Mr. Harsh K. You can renew it, sir. You can have a tenure of 1 year and renew it for another year, another year, another year. There's no limitation on the tenure renewal, Therefore, the tenure is almost infinite as long as you pay the things. Renew is expensive. Yes, sir. I have to eat food, wear dress. No, I'm just kidding. Yes, sir. Renew, we'll look into it, sir. Renewal is the same thing. It's charged by the lender, basically. We'll try to look into it definitely. If the renew is becoming very expensive, then definitely we'll look into it. Please contact us and we'll do the needful. We can consider it. If it's a very high loan amount, definitely we'll consider it how to adjust the renewal. But we have to talk. It's not my own decision. It's also the decision of the lender. Whichever lender it is, there are about 5 NBFCs in the bank. Yeah, somebody wants to talk. Please go ahead.
Yeah, actually, I just wanted one information regarding loan against mutual fund.
Yes, sir.
Say you just spoke about renewal, right?
Yes.
Now, just 1 year, is it so that the amount of loan, whatever the quantum of loan taken, it needs to be repaid, and again one has to apply a fresh for?
No, sir. No, sir. No, sir. No. Then what is the point of renewal? That's a new loan, right?
Right. So what would be the process in that case?
Basically, if you see, for example, I'll give a very simple example. You have 10 lakh rupees, you've taken a 5 lakh loan, you've taken all the 5 lakhs, okay?
Right.
You can take 1 lakh, 2 lakh. Assume you've taken all the 5 lakhs for just our argument. Then the only condition for renewal is you should have paid the interest for all the 12 months, preceding 12 months, obviously. There should be no defaults. I mean, if there's a default, you have to pay it back. And your value of the asset should be 10 lakhs. See, it cannot be 8 lakhs or 9 lakhs or 9.5 lakhs or 9 lakh 80,000 or something. Then you pay the 20,000 extra and make it 10 lakhs. Because the agreement is the same. The renewal, we don't have a separate agreement. Renewal is basically on top of the agreement of 10 lakh lien value. We call it lien value, which is your asset value. 10 value, I'm giving you 5 lakhs. Okay.
So what I understand
10 lakhs,
is,
it has to be 10 lakhs when you renew. Sorry, sir, go ahead.
Yeah, what I understand, like post 1 year, if the market is favorable, that means definitely the person is going to have an edge over it. Or during that point of time, if the market is down, one has to make good the loss, and then one can go for the renewal, right?
Yes, sir. Yes, definitely. Yes, because at any point of time, you have to be 100%. And when you're renewal, you have to be 100% LTV. LTV is 50%, means you have to have 100% of the assets lien mark. That's why it's a regulation. Nobody can do anything about it.
Got it. Thank you.
Okay, but usually it will be like 10,000, 20,000 less or something like that, or a little bit less. Nowadays with volatile market, I don't know how much less, but it can't be that much less because mutual fund doesn't fall that much. It doesn't fall like 50% or 30% or something like that. It doesn't do that. Usually it's, over the period of time, it would have grown. Therefore, you don't have to worry. Most of the time, renewal happens by a click of a button because you already have the assets at 10 lakhs or more.
Fine. Thank you so much.
Somebody has written 12%. Sir, we have reduced the interest rate. Reduced interest rate at 10.5 is coming. 10.25 is coming, sir. Just watch out for us. We've already done it. I'll ask somebody to contact you, Mr. Harsh K. somebody to contact you, it's no longer 12%, it will come to 10.25, sir. That's what we are talking about. Any other questions? There's one more chat somewhere. In the portal, yes, sir. We will change it, sir. We will change it. In the portal, it's showing. Yes, sir. Yes. That's why I said I'll call and ask somebody to explain to you what the situation is. And it is 10.25. We'll start giving it 10.25. It's just a question of time. We'll change the portal and the process to make it happen. Anybody else? Anything? You can contact us. I mean, you have the numbers, everything here. I mean, everywhere, everything is here. What you want to do, and you can sign up. WhatsApp number is there. Email number is there. You can directly contact any of us. Basically, all our phone numbers are on the website and stuff like that. Therefore, partner with us. Whoever is not partnered with us, register with us and see what it is. B2B sign up. That's what the thing is. You can sign up with your name, email, or mobile. That's all you need. And then you can see how good or how bad we are and stuff. If you're bad, please let us know. If you're good, bring in more customers. Thank you very much for the time on a busy Tuesday afternoon. Really appreciate all of you coming here. Any questions, please let us know. Please register if you're not registered. If you're registered, please make sure you bring your customers and enjoy the benefits of the platform. Thank you very much. Have a nice evening.